Cape Coral, the sparkling jewel of Florida's Gulf Coast, has just become the epicenter of a financial earthquake. In less than a year, home values have plunged by nearly 27%, wiping out billions in equity. What was once America's hottest real estate market now stands as a chilling warning to every homeowner across the Sunshine State. This isn't a dip, it's a collapse. Today, we're breaking down exactly how Cape Coral's stunning fall is rattling the entire South Florida housing market, why the governor's office is in full-blown panic mode, and how a mix of political pride, speculative greed, and environmental pressure turned a paradise into quicksand. And by the end of this video, you'll see the one decision that could decide whether Florida bounces back or breaks for good. Let's make this real. If your home suddenly lost 30% of its value, what's your next move? Would you sell, hold, or double down and buy more? Drop your thoughts in the comments, because what's happening in Cape Coral could soon reach your zip code. It started like a dream. Cape Coral was the poster child of Florida's boom: endless canals, luxury homes, and record-breaking prices. Investors called it the next Miami. But every boom hides its bust. Beneath the sunshine was a shadow: speculative buyers using cheap credit and out-of-state cash to inflate demand. The foundation wasn't concrete, it was hype. When the music stopped, prices fell off a cliff. Real growth isn't built on slogans. It's built on sustainability. Governor DeSantis once pointed to Florida's housing boom as proof his policies worked. "Freedom fuels prosperity," he said. But now, as the numbers nosedive, that slogan rings hollow. Internal memos from his office reportedly show mounting concern over collapsing property taxes, construction layoffs, and investor flight. The political optics are brutal. A governor defined by growth now faces decline. Markets don't care about politics. They care about fundamentals. Leadership isn't about spin. It's about solutions before the storm hits. Real estate contagion moves fast. Within weeks of Cape Coral's crash, fear spread down the coastline, from Fort Myers to Fort Lauderdale. Developers who once bragged about selling out entire buildings are now quietly canceling projects. Realtors whisper about buyer ghosting as contracts fall through at the last second. Even Miami's luxury condos feel the tremor, with listings rising and offers evaporating. Markets run on confidence, and panic destroys it faster than any hurricane. In real estate, fear is more viral than any financial forecast. Not long ago, Cape Coral renters were fighting bidding wars just to land a two-bedroom. Now, landlords are cutting rents by 20 to 40% to keep tenants. What was once a gold rush has turned into a quiet retreat. Investors who banked on endless demand are suddenly bleeding cash, while tenants finally taste leverage for the first time in years. It's a full-circle reversal, and it happened faster than anyone predicted. In housing, gravity always wins. When prices soar beyond fundamentals, balance always returns, brutally. If the market crash was the earthquake, Florida's insurance crisis is the aftershock. Premiums have skyrocketed, some doubling or tripling in the past 2 years. Homeowners who once paid $2,000 annually are now staring at bills of $6,000 or more. Insurers keep fleeing the state, citing hurricane risks and fraudulent claims. But the fallout hits ordinary families hardest. It's no longer about luxury properties, it's about survival. People can't insure what they can't afford. That's not a market issue. It's a livelihood issue. A stable housing market starts with affordable protection, not political promises. The moving trucks tell the story no press release will. Retirees, small business owners, and middle-class families are quietly packing up and leaving Florida. Some head north to Georgia or the Carolinas, others out west, chasing lower costs and less chaos. The dream of living where others vacation has turned into an unaffordable fantasy. Each family that leaves takes their spending, their taxes, and their community ties with them. Empty homes line once thriving neighborhoods. Property values dip further. Local shops shut down. When people leave, prosperity follows them. A state's strength isn't in its skyline, it's in who stays. Just 2 years ago, construction cranes dotted Cape Coral's skyline like trophies. Today, half of them sit idle. Developers who once raced to build luxury condos are suddenly canceling projects mid-frame. Financing has dried up, subcontractors aren't being paid, and workers are being laid off in droves. One developer admitted, "We built faster than demand ever existed." The same overconfidence that fueled the boom is now feeding the collapse. Boomtowns don't explode, they slowly suffocate. Smart developers know that restraint, not risk, sustains longevity in volatile markets. The Federal Reserve's rate hikes have turned Florida's homeowners into financial hostages. Mortgage rates have jumped from 3% to over 7%, doubling monthly payments for new buyers and freezing refinancing for everyone else. Homeowners who stretched thin during the boom are now underwater, owing more than their homes are worth. And for many, there's no escape. Selling means taking a loss. Staying means financial strain. Debt feels light on the way up, crushing on the way down. Financial survival starts with discipline, not desperation. Know your limits before the hype hits. When panic first hit, Governor DeSantis didn't roll out relief measures. He rolled out messaging. His administration launched the Stay Strong Florida campaign, urging citizens to stay optimistic and trust the market. Billboards, press conferences, and carefully worded tweets tried to mask the unraveling reality. But homeowners don't live in headlines. They live in mortgages. Optimism didn't lower premiums. It didn't stop foreclosures. It just bought time. And time, in a collapsing market, is expensive. Hope doesn't pay the mortgage. Real leadership means acting on data, not doubling down on denial. Local media initially echoed the governor's tone. Words like temporary dip and market correction flooded broadcasts. Analysts on TV smiled through gritted teeth, insisting, everything's fine. But when foreclosures doubled and listings spiked 40%, that narrative crumbled. Independent journalists began publishing satellite images of half-built neighborhoods, drone shots of empty developments, and interviews with families forced to walk away. Public trust took the final hit. The truth, once hidden under press releases, was now unavoidable. Numbers don't lie, narratives do. Transparency rebuilds confidence faster than any press conference ever could. If you've made it this far, you're seeing what most headlines won't say, the real human and political story behind Florida's market meltdown. So if you value in-depth, no-spin breakdowns like this one, tap that like button, subscribe, and let's keep exposing the stories shaping your economy. For years, developers brushed off Florida's climate warnings as alarmist. But now, the data speaks louder than the waves. Rising sea levels, stronger hurricanes, and repeat flood claims have made entire zip codes uninsurable. Even inland areas once considered safe are facing steep climate premiums. Investors are quietly retreating, and banks are refusing to underwrite new loans near coastal zones. What was once paradise now carries a price tag of risk. Nature always wins the long game. Real estate stability starts with resilience, not denial, of environmental realities. The short-term rental gold rush has officially backfired. Investors flooded Cape Coral and South Florida with AIRBs, chasing easy profits. But with tourism down and travel costs rising, supply crushed demand. Thousands of units now sit empty, collecting dust instead of income. Even season hosts are slashing nightly rates just to stay afloat. Neighborhoods once buzzing with weekend visitors now echo with silence. When everyone's a landlord, no one makes rent. Sustainable profit means serving residents, not speculators chasing overnight returns. When home values fall, it's not just the realtors who suffer. The shockwave hits every corner of the local economy. Restaurants that once fed construction crews now sit half-empty. Landscaping companies are cutting hours. Small retailers, who thrived on homeowner spending, are closing their doors for good. The illusion that housing collapses only affect homeowners is a myth. It's a domino effect that starts with mortgages and ends with livelihoods. A housing crash never stays in housing. Strong communities depend on economic diversity, not single-sector success. Behind closed doors, Tallahassee is in chaos. Leaked internal memos reveal aides urging emergency housing relief, while the governor's team debates optics versus action. Critics accuse DeSantis of ignoring early warning signs to protect his national ambitions. Supporters insist he's buying time for the market to stabilize. But as foreclosure numbers climb, patience wears thin, and political allies start to distance themselves. This isn't just a market crisis anymore. It's a leadership test. Politics can't outshout market math. Crisis management starts with humility, not headlines. When big money moves, markets listen. Hedge funds and institutional investors, once bullish on Florida real estate, are now quietly retreating. Firms that bought hundreds of Cape Coral homes during the boom are dumping them in bulk at discounted prices. Some call it a controlled retreat. Others call it what it is: panic selling. The same investors who inflated the bubble are now accelerating its deflation. Smart money runs first. When professionals start exiting quietly, small investors should start asking loud questions. Economists are calling it déjà vu. The Cape Coral collapse mirrors the early signs of the 2008 housing crisis: speculative buying, reckless lending, and political denial. Only this time, the players are bigger, the stakes higher, and the data faster. While policymakers must incentivize long-term stability, not short-term profit. It's a tall order, but not an impossible one. As one economist put it, Florida doesn't have a real estate problem. It has a realism problem. Recovery starts with responsibility. Stability isn't found in fast growth. It's built on smart governance and sustainable planning. Analysts warn that ignoring the pattern could trigger a regional or even national correction. The script hasn't changed, just the cast. History whispers before it screams. Recovery isn't impossible, but it won't come from wishful thinking. Experts say Florida's housing rebound depends on infrastructure reform, flood mitigation, and a total insurance overhaul. Developers need stricter zoning to prevent speculative overbuilding. So what should Florida homeowners do now? Experts advise holding cash, avoiding panic sales, and diversifying beyond property. Some see opportunity in chaos. Others are bracing for more pain. The key, analysts say, is liquidity and patience. Because real estate doesn't crash forever, it cycles. The winners will be those who plan, not react. In chaos, clarity is profit. Make decisions based on fundamentals, not fear. The smart move is the calm one. Cape Coral's collapse isn't just a housing story. It's a warning about leadership, greed, and denial. The governor's panic isn't about numbers. It's about narrative control slipping away. When perception drives policy, crashes follow. But out of every correction comes a recalibration, a chance to rebuild smarter, safer, and stronger. Stay tuned, because our next video dives into how Florida's insurance meltdown could trigger the state's next economic recession and what it means for homeowners nationwide. This content is for informational and entertainment purposes only, not professional advice. Always consult a qualified financial or real estate expert before making investment decisions. The smartest investors aren't predicting the future, they're studying the past.